Welcome back to the channel, everyone. I hope you're having an amazing day. If you enjoy Cardano updates, cryptocurrency market analysis, macroeconomic insights, and in-depth explanations of what's really moving the crypto market, then you're in the right place. Today, we're going to break down why Cardano, also known as ADA, has been under pressure, what role the recent geopolitical tensions are playing, and whether this latest price decline is being driven by Cardano-specific news or by broader market conditions. Make sure you stay until the end because there are several important developments that every ADA holder should understand before making any investment decisions. This video is for educational and informational purposes only and should not be considered financial or investment advice. Always do your own research before making any investment decisions. Recent geopolitical tensions between the United States and Iran have triggered a broad sell-off across the cryptocurrency market, creating significant pressure on both Bitcoin and the altcoin sector. During the period between July 7th and July 8th, the overall crypto market declined by approximately 1.24% following. As geopolitical uncertainty increased, investors began rotating out of higher-risk assets and moving towards safer investments. At the same time, oil prices moved higher, while this strengthened two macroeconomic developments that historically place additional pressure on speculative assets like cryptocurrencies. New sanctions targeting Iranian oil further increased uncertainty across global financial, contributing to a widespread reduction in risk appetite. Because of these macroeconomic developments, Bitcoin, Ethereum, and most major cryptocurrencies experienced declines, and Cardano was no exception. Market reports consistently linked the crypto sell-off directly to escalating U.S.-Iran tensions, explaining that higher oil prices, a stronger dollar, and increased geopolitical uncertainty created an environment where investors became much more cautious. Current market data also show that the total cryptocurrency market capitalization declined by roughly 1.7% over the last 24 hours. At the same time, derivatives open interest remained elevated while funding rates began cooling, another indication that traders were reducing leverage and adopting a more defensive approach rather than aggressively buying risk assets. Taken together, these market conditions strongly suggest that a significant portion of ADA's decline over both the 7-hour and 24-hour period was simply the result of Cardano moving together with the broader cryptocurrency market during a macro-driven risk-off event. When we look specifically at ADA's price action, its behavior closely matches what has historically happened during periods when investors shift capital toward Bitcoin. Rather than experiencing a unique Cardano-related event, ADA appears to be following the typical pattern of altcoins underperforming Bitcoin during periods of market uncertainty. Market summaries showed that while Bitcoin briefly experienced weakness due to corporate selling before recovering, many large-cap altcoins continued struggling even after Bitcoin stabilized. Reports specifically noted that both Dogecoin and Cardano declined by approximately 2 to 3% on a daily basis, while Bitcoin's market capitalization and overall market dominance remained relatively strong. Analysts described the broader altcoin market as sluggish despite Bitcoin's recovery, reinforcing the idea that investors were concentrating capital into Bitcoin while reducing exposure to higher-risk alternative cryptocurrencies. This type of market rotation is extremely common during uncertain macroeconomic conditions. As Bitcoin dominance remains stable or increases slightly while total crypto market capitalization falls, it usually indicates that investors are seeking relative safety within the crypto sector itself rather than exiting completely. Because Cardano is considered a higher beta asset compared to Bitcoin, it naturally experiences larger percentage declines whenever investors reduce risk exposure. Social media discussions and trading communities over the last day further support this conclusion. Instead of reacting to any major Cardano announcement, traders were primarily sharing short-term scalping strategies, discussing supply and resistance zones, and debating leveraged long and short trading opportunities. These types of speculative trading activities can easily create additional intraday volatility without requiring any major fundamental news. Therefore, the additional downside experienced by ADA during the 7-hour period is entirely consistent with normal altcoin behavior during a broad market correction driven by geopolitical uncertainty rather than any unique Cardano-specific catalyst. Although there is one ongoing Cardano-related story receiving attention within the cryptocurrency community, it should be viewed primarily as a background sentiment issue instead of the direct reason behind ADA's latest decline. In late June, wallet infrastructure connected to the Cardano ecosystem through Emergo experienced a significant security incident. SecondFi, a self-custodial wallet that had been rebranded from Yoroi, suffered a vulnerability that allowed attackers to steal approximately 16 million ADA, worth around $2.4 million at the time of the exploit. Following the discovery of the vulnerability, emergency security measures successfully protected an additional 129 million ADA from being compromised, and a recovery plan was announced covering 374 affected wallet addresses. During the last 24 hours, several cryptocurrency news outlets published follow-up reports focusing on Control Wallet, a major multi-chain wallet that had integrated Cardano support. Control Wallet announced that it will permanently shut down on August 3, 2026, directly referencing the earlier Cardano-related exploit, while encouraging all users to move their funds before the shutdown date. Additional reporting explained that the company immediately removed its application from app stores and plans to disable transfers and swap functionality in early August. These reports continue connecting the shutdown decision to the June security incident affecting a portion of Cardano wallet users. While these developments certainly keep the exploit within the cryptocurrency news cycle and may create some caution among ADA holders regarding wallet security, it is extremely important to understand that the vulnerability existed within wallet software rather than the Cardano blockchain itself. The Cardano base layer was never compromised. Consequently, while these wallet-related headlines may contribute to slightly weaker market sentiment surrounding the Cardano ecosystem, they are not new developments occurring within the last 7 hours, and therefore do not provide a convincing explanation for the specific price movement being discussed today. Interestingly, there is also a positive institutional development that has largely been ignored by the market, further supporting the argument that broader macroeconomic forces currently outweigh individual Cardano news. Clearstream, one of Europe's leading institutional custody and post-trade infrastructure providers, recently expanded its institutional cryptocurrency custody services to include Cardano, alongside several other major digital assets, including XRP, Solana, and Avalanche. This expansion forms part of a MiCA-compliant institutional custody rollout designed to meet increasing demand from professional investors seeking regulated digital asset infrastructure. From a long-term perspective, this represents a constructive development for Cardano because expanding institutional custody solutions can improve accessibility, strengthen credibility, and potentially encourage greater institutional participation over time. Under normal market conditions, this type of infrastructure announcement could have generated positive sentiment for ADA. However, despite this bullish institutional headline, Cardano's price still moved lower. This contrast provides additional evidence that short-term macroeconomic uncertainty, geopolitical developments, and broad market positioning are currently exerting far greater influence on cryptocurrency prices than asset-specific positive news. Overall, the available evidence points toward a relatively clear conclusion. Cardano's recent weakness appears to be driven primarily by macroeconomic conditions rather than by any major new problem unique to the Cardano ecosystem. Escalating geopolitical tensions between the United States and Iran, rising oil prices, a stronger U.S. dollar, declining investor risk appetite, and capital rotation toward Bitcoin have combined to create a difficult environment for higher-risk cryptocurrencies. While the ongoing wallet exploit story continues to affect background sentiment, it is not a fresh catalyst capable of fully explaining the latest 7-hour decline. At the same time, positive institutional developments such as Clearstream's expanded custody support demonstrate that long-term adoption continues progressing even while short-term prices remain under pressure. For investors, this highlights the importance of distinguishing between temporary macro-driven volatility and long-term ecosystem development. At the present time, market conditions suggest that global risk sentiment and investor positioning are dominating cryptocurrency price action far more than individual Cardano-specific headlines. If you found this analysis helpful and want more in-depth Cardano updates, crypto market breakdowns, and the latest investment insights, don't forget to smash the like button, subscribe to the channel, and turn on the notification bell so you never miss an important update. Thank you so much for watching, stay safe, and I'll see you in the next video.